ahead. Tell her about it. It's 8:42 here. Let's tell her about how her money's doing, shall we?
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
Really should do that, especially the way world events are going. Speaking of advisors, we have Philip Statler from Statler Financial Services back on the phone this morning. Philip, it's been so doggone quiet since you left town for a couple of days. I don't know what we should be talking about this morning. How are you?
I'm doing well, Dave, except for I don't know what you did to gas prices since I left. I mean, I left and they were $2.80 a gallon. I come home from my meeting in Winter Park and they're like $3.30. It's like, man, Dave just did not do his job the last couple of days.
Well, I think we're going to have to blame some of it on the Strait of Hormuz. Yeah, it's been an eventful week. On Monday morning when I was talking, I was going to say one of the pieces of advice I got from advisors many years ago was you always watch Friday because nobody likes leaving money on the table when weird junk can happen. On Friday morning, or on Friday afternoon when the markets closed, things were generally pretty optimistic at turning up. I think a whole lot of investors over the weekend when we started dropping bombs on Iran said, oh, my Lord, I should have taken some money off the table because it has been a herky-jerky week with the campaign against Iran. Yesterday, on the other hand, was kind of a rally, and I was defining it partially on the fact that we had a really pleasant private sector employment bit of news. ADP surprised us, gave us some hope, and the fact that yesterday morning at this time, we seem to have a defined theater there, that the hostilities were going to stay in the Arab states and just between Israel, Iran, and the Arab states, and it was a defined theater, which kept Europe real nervous, but we actually had a rally. The Dow came up by about 238 points, Standard & Poor's up by 53, NASDAQ up by over 1.25%, up 291 points. And then yesterday during the day, Iran threw a missile that was headed for Turkish soil. Turkey is a NATO member, and if something had hit there, all of a sudden this war could get a lot more dangerous, couldn't it?
It really could. And let's don't leave the Russell out because it was actually almost the best performer yesterday at a little over 1%. So everything was solid green yesterday, and I was excited, Dave, to see that. But you're right. As soon as they start throwing missiles around, then things start to happen, and I think that's kind of parlaying into this morning, seeing the markets reverse again and start to produce a little bit more red ink.
Yeah, we're capable of getting very jittery, and probably with good reason too. When we start throwing heavy-duty armaments at other countries and they start throwing them back at our people. So far, by and large this week, the European and Asian markets have been far and away the most nervous of the bunch. Asia, because a big chunk of Chinese fuel comes from Iran, and if we're not letting any Iranian fuel out, obviously that's not good for the Asian rim. Over in Europe, well, like I said, they started throwing missiles in the direction of Turkey, which is a NATO member country. That could trip in that NATO provision that an attack on one is an attack on all, and that could make the war get really big and really hot all at once. So it suddenly gets a little bit more upsetting. This morning we start out with, on the macro side from our government anyway, first-time unemployment claims, and the good news from the ADP private sector number from last month, then coupled with the fact that first-time unemployment claims stayed the same as last week, inordinately low, only 213,000 jobs lost. On balance, the picture is starting to draw cleaner. We got an unemployment market that's relatively stable, not optimally great, but not as bad as some folks say it is. That's about the closest description I can give of it.
Yeah, I think from the employment standpoint, you got to like the numbers. They've been consistent, and that's a plus. Is when we can stay consistent, then people start to feel a little bit more comfortable around the employment number. I don't know if you got these numbers, Dave. We didn't talk about them before, but the U.S. productivity number for the fourth quarter came in and it was better than expected. And they revised the third quarter U.S. productivity up to
Cool.
5.2%. Expectation for the fourth quarter was 1.8. It came in at 2.8. So I think that was some good news. Um, the other thing I saw, and we didn't talk about this, but import price index actually rose a little less than expected, 0.2% versus 0.3. So I mean, I'm thinking from what I'm seeing here, there's not really any bad news in these numbers.
Absolutely. The import price index was 0.1% last time, but so it's a little acceleration. But again, you analyze 0.2%, that's 2.4% inflation in that sector, and things could be a lot worse, and they are on the other measures, aren't they?
They are. Now, tomorrow, we'll get the U.S. employment number from the government, and we'll see what that looks like from February, because I will tell you that the expectation is 50,000.
Yeah, I
And
was going to say
that's,
they're expecting El Stinko, aren't they?
yeah, that's way off the 130,000 it was in January.
And it's interesting because if I remember correctly, last month the ADP number was a profoundly unpleasant surprise. Today, this week, the ADP number for last month was a resoundingly pleasant surprise. I'm just wondering if we're looking at a timing for the job changes, because we had a really crummy number in the private sector last month and a pleasant surprise overall in the overall number. I'm just wondering if it's going to balance out, and the predictions of a really bad total employment number might very well come true this month, just following ADP from last month.
Let's hope not.
You and me both. I'm hoping otherwise. We do have a few earnings reports that are out. I didn't get a chance to ask you what your headliner for the day was, but I've got a few household names on my list of people that reported after the bell last night and before the bell this morning. What are you seeing for a trend from the individual companies?
Hey, let's start out with a company that's coming our way. BJ's Wholesale Club. They
Woo!
yeah, they reported they beat on earnings and revenue. However, their expectations and guidance fell a little short. They expect earnings to be between $4.40 and $4.60 a share versus the estimate that the analysts say is $4.66 a share. So that's costing BJ's a little bit of money today, down a little over 4%.
Well, they ought to come to Sebring faster. We'll fix that problem in a heartbeat. The excitement I'm hearing about having a wholesale club to town, I fully expect that to be a very successful opening at the absolute least.
No, I do too. Absolutely. I mean, we've been clamoring for some kind of wholesale club to come, and so it'll be good to have one of them here for sure. From that standpoint, the
What else
other,
we got?
I'm gonna say the big heavyweight that we had come in yesterday after the market closed was Broadcom.
Mm-hmm.
Broadcom had stronger results for their first quarter than expected. I like some of the numbers I saw. I mean, they didn't beat by a huge amount on their earnings, like 2 cents, came in at $2.05. Revenue ahead of expectations. I think where I really see them is year over year numbers. Their revenue numbers grew by 29% year over year. You got to like that increase. And so you've got Broadcom up almost 5.2% this morning.
There's good news in the tech industry that the sell-off right now is only restricted to software stocks in terms of sector issues. The hardware seems to be doing okay.
It does.
Yeah.
I was looking at a couple kind of big misses, and StubHub had a relatively large I'm gonna say miss, at least in terms of their fourth quarter revenue was off by my head about $40 million.
Ooh.
And so yeah, that not good. Their earnings came in basically in line with expectations, but they're I don't know if they're my big loser today, but if they're not, they're pretty close. They're down 14.8% this morning.
Crud. They need another Taylor Swift tour. So
And then we got ChargePoint. They're, they provide the charging stations for electronic vehicles, and they kind of I guess they did okay on earnings. I didn't see any numbers there. This was really reflected of their range that they're giving for revenue for this next quarter. And it was a little off of expectations. They're trading down about 4% this morning.
Ouch. Time for one, maybe two more. What do we got?
Let's see. I'm gonna say the last one I have is not a name we recognize a lot. Trade Desk, and a lot of people don't realize Trade Desk is an advertising platform that they sell ads. And so they did not have any earnings report. This news is based on news circulating that OpenAI has started in early talks with Trade Desk to run their advertising through them and sell ads on Trade Desk. And so that has popped Trade Desk up almost 21.5% this morning.
The glamour of internet advertising.
That's for sure.
Resetting the table. It was kind of a recovery yesterday, and I was kind of sort of afraid it was going to be a temporary thing. 45 minutes before we opened this morning, what are we looking at? I'm seeing red in my delayed quotes.
It is red, Dave. I wish I had better news. We're bouncing back down again. We're on the downward slope. The Dow is down 0.5%. The S&P 500 is down 0.33%. As well as the NASDAQ 100 down 0.33%. The big loser right now is the Russell 2000, getting down close to 0.9% this morning. On the other side of the coin, we got silver still tracking low this morning, down almost 0.2%. Gold is flat right now. Crude oil heading up again about 3% this morning, $76.91 a barrel. It's trying to get to 80, Dave. I don't like the number.
They keep talking about $4 gas. I guess we probably need to start getting used to the concept until we stop throwing rocks at each other in the Middle East. I'm afraid that's the direction. Overseas markets aren't particularly happy this morning either. The European community is pretty much evenly down. UK is about the only green ink I've gotten. They're only 0.06% up. Overall, the average European index is down by about 0.33% halfway through their trading day. Over in the Asian Rim, the Chinese market's actually recovering a little bit this morning. One of the two Chinese mainland markets up by over 1%. On balance, we got some green ink for a day. They're basically getting our recovery from yesterday today over there. Getting an idea as to how I can retire and actually plan on it, that takes a trained pair of eyes that actually understands that stuff. Philip, how do I get an appointment with you to use your eyes?
Dave, and that's important that people have a plan in place. And so often I sit down with folks and they don't have any kind of plan. They don't have a plan to get ready for retirement. And that's really our specialty, is helping people really prepare financially for retirement. Give us a call at 863-382-0037 to schedule your core retirement analysis, where we'll look at where you are and see if you are on track. And then catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And at 7:30 a.m. newstalk730am.com as well. Enjoy the day, my friend. Let's cross our fingers we can turn it around, and I'll talk to you tomorrow. Fair enough?
Fair enough, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Folks, again, I want to thank you for joining us today. I hope you've had a great week so far. Check out our website at statlerfinancial.com. You can schedule time with me right there on the website. I'd love to spend some time with you. Take care. Talk to you again tomorrow. Bye now.